Spotify stock just reported earnings, and as you can see, they absolutely crushed as the stock is up 11% in the pre-market. The stock needed this as it is down 41% in the past 6 months. So let's take a quick look at their earnings and then dive into a more in-depth analysis of the company. Now, as I've said, they absolutely crushed on earnings. Record users as total monthly active users came in at 751 million, which is up 11% year over year. Premium subscribers up 10% year over year, and ad-supported monthly active users came in at 12% growth year over year. Now, in terms of total revenue, up 7% year over year as they came in at $4.5 billion compared to the 4.2 the year prior. Now, gross margin, as you can see here, keeps growing, and they reported 33% in that. Now, in terms of free cash flow, it is down 5% year over year, but this is because the same quarter last year, they made $877 million, but then fell to $534 million, and since then, it hasn't stopped growing. And they reported growth across all regions in terms of monthly active users. Europe grew 26%, North America 16%, Latin America 21%, and the rest of the world 37%. Another big positive is their free cash flow as they delivered record free cash flow in 2025. For the quarter, they did $834 million in Q4, bringing the full year 2025 free cash flow generation of $2.9 billion, which is huge. And they also repurchased $433 million in shares in Q4. In conclusion, their earnings were exceptional, but keep in mind that this was only one quarter, so let's take a look at a broader look of the company to see if it is a buy at today's price or not. Now, the market cap compared to last year has decreased 17%, and it is now at $85 billion. However, the revenue has grown 11%, net income 100%, and EPS 93%, which is huge. They are now trading at a 4P of 31. However, they have a ton more free cash flow, so I would say the price to free cash flow at the moment is currently around 25, which looks like an alright valuation for a company that is growing this much. However, we'll talk later about it more in depth with a discounted cash flow model. Analysts have them rated as a strong buy with a price target with 78% upside. Now, if we take a look at their financials, Spotify's revenue has seen insane growth over the past decade from $1.9 billion to $16 billion right now, very consistently. Now, it is true that they are not growing at that double-digit revenue growth that they were in the past, but nevertheless, 11% growth they reported this quarter, which is still huge. Now, if we take a look at their profit, they have also grown massively. This used to be an unprofitable company and now generating $1.4 billion in net income. But as I've said before, they have almost double free cash flow, currently at $2.9 billion. This is something that I really like because free cash flow is a lot more reliable, as net income can fluctuate because of different reasons, while free cash flow is simply cash in minus cash out. Now, this company also has very good margins. Gross margin has been at 31%, and we have seen that they have grown this to 33% in the last earnings. Profit margin is around 8%, and free cash flow margin, as we have seen, more than double, currently at 17%. Now, another thing that I had an issue with this company in the past is that they were issuing tons of shares. This is very bad for investors because you share the profits of the company with more people. However, we have seen that in this quarter, they have actually bought back shares, so I'm glad they are stopped issuing shares. And if we take a look at the financial forecast, analysts are expecting huge growth in terms of revenue and profit. Revenue growth, double-digit revenue growth consistently until 2023, reaching $32 billion. Now, in terms of profit, this year $12.38 per share, all the way to $22.49 per share, which is normal because, as I've said before, they have tons of free cash flow, much more than net income, which is what EPS is based on. So it is normal that EPS will catch up free cash flow. And talking about cash, this company has an exceptional balance sheet. They have $8.7 billion in cash and $2.6 billion in debt, which is amazing. And one could argue that the company is actually not worth $85 billion, but rather $79 billion. Because remember that when you invest in a company, You have to think about it as you were buying the company as a whole. And before we jump into the valuation, if you want access to where I've shown all the stock data, you have my code to stockanalysis.com in the description. And in order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $266 per share, middle $380 per share, and high $529 per share. Now, because the stock is trading at $415 per share, but because the stock currently in pre-market is trading at around $453 per share, it means that if my low assumptions occur, you would get a 0.9% annual return on your money, middle 6.9%, and high 12.8%. So I would say Spotify stock is trading at around fair value or slightly undervalued because we have to also take into account the amazing balance sheet. Now, this is according to my assumptions, in which I have the company growing revenue between 7 and 11% annually for the next 7 years, averaging a profit margin and free cash flow margin between 17 and 23%, and I assigned a PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own, I'm going to leave a link to the spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And in conclusion, although I believe Spotify is an amazing company, which definitely has a moat and definitely is going to keep growing, I just believe that the valuation is a bit stretched at the moment, and I'm going to wait to see if the company falls. I hope you found this video valuable. Let me know what you think about their earnings in the comments, and I'll see you in the next one.